video to share with you today. And this is about preparing your portfolio. So stick with me for the next few minutes and hopefully this helps you gain some information and knowledge. So I want to talk a little bit first about the market forces today. It's August 27th, 2020. Stocks are pretty much at all-time highs. In the United States, the COVID-19 infections are at about 5.8 million. That's nearly doubled just in the past, I would say, 5 or 6 weeks. The number of deaths officially is about 179,000 in the United States. Worldwide, the infections are at 24 million. That's staggering. And the number of deaths officially is about 826,000. On a positive front, there are more than 175 companies that are working on a vaccine. And some of the early results that we have seen from companies, for example, from Moderna and others, seems to be quite promising. But at the earliest that we would have a vaccine is probably sometime at the end of Q1, possibly Q2 of 2020. So we've still got the tough fall season, the winter season to go through. And so I think things are going to get even more challenging in the next few weeks. Gold and silver are near all-time highs, though they have pulled back a little bit, maybe 5 to 10% over the last few days. But there's been a tremendous run-up over the past year in both gold and silver. The VIX, or the volatility index, is currently around 22, and that's in reference to the peak in March when we had the major stock crash. Volatility was all the way up to 80. And just for reference, typically the volatility has been in the range of 10 to 12 for the past couple of years. So 22 is still higher than normal, but it's definitely not anywhere close to where it was in March during the last crash. I do expect volatility to increase as we get closer to the election and definitely beyond it. Now, I want to show you the analogy for your portfolio, the way I think about your portfolio. And I'm going to give you the soccer analogy. Hopefully there are some soccer fans watching this video. I think if you know anything about soccer, you would know that typically if you're a coach, you want to have a really good goalie. Now think of yourself as the goalie. You definitely want to have a good, strong defense. That's these guys right here. You want to have, again, a good midfield section, and you want 2 or 3 really good strikers. These are the Cristiano Ronaldos of the world. The way I think of these 3 categories, I think of the strikers as the growth stocks. These would be the Googles, the Facebooks, the Amazons, the Alibaba, Tesla, etc. These would be the growth stocks that have really strong balance sheets, strong products, and tremendous demand in the world. Then you've got your midfielders, and these would be your value and dividend stocks. Now, you've got to be careful here because you don't want to get into a value trap. You see sometimes a lot of dividend stocks paying out 8, 9, 10, 12% dividend. In my general view, my opinion is stay away from those. The really good dividend stocks are those that still have some growth, maybe 5% a year growth, but they also pay a 3 to 5% dividend. And some examples of those are things like AbbVie, Bristol Myers, perhaps AT&T, EPD, which is energy products. And there's several in this field, and I'll give you a few examples on the next slide. And then finally, you want to have a really strong foundation, and this would be things like gold, perhaps Bitcoin or some other cryptocurrency, definitely some cash on hand, real estate. I think as inflation starts to take off over the next year or two, I think real estate prices are going to be much harder to obtain. It's not like the prices are going to go up, but with the dollar falling, your ability to pay that same amount of money is going to be much harder. So the way I think about it is basically the investment for your portfolio really depends on your age and how many years you have left to retirement. So if you're young, then typically you have 0 to 5% in the foundational categories, maybe something like 5 to 20% in the dividend stocks, and most of your money is in growth stocks. If you're middle age, it shifts a little bit, maybe 10 to 25% is foundational, 25 to 50% in the middle category, and maybe somewhere between 50 and 100%, the rest basically going into growth stocks. And obviously if you're senior, then you need to have much more. If you're closer to retirement or in retirement, you should definitely have more cash available. Your money should be in real estate, perhaps some gold, things like that. Also definitely dividend stocks, you want to have that as a big part of your portfolio. And then growth stocks may be, the rest, so maybe 20 to 30% of your overall portfolio. So that's how I think of your portfolio. Hopefully you like this analogy, and this is something that stays in your mind, helps you remember how to invest. So another way to look at this is, if you look at when the market is positive, typically you're going to get this tremendous return from your growth stocks. But when you have a negative market, which we could be getting into in the next few weeks, then you're going to be counting on the foundational portfolio as well as your dividend stocks to help you keep going. Here's some list of 25 stocks that I actually put out a video on, and you can see a link in this here. I put this out in the middle of June. I gave you the buy prices, I gave you some target prices. I'll give you a quick update. For example, Facebook, I had recommended buying it in the range of 180 to 200. Well, right now Facebook's already close to 300 just in the last month and a half. Alibaba is already at $280, $290 a share. I think AbbVie is still a great buy. I had recommended buying it at 80 to 85. I think it's around 93, 94 right now. And this has tremendous potential. I'll let you read through this list. I won't go through all of them again. And you can certainly rewind and look at this video again, or pause it and take a look at the screen. So with that, again, I just want to conclude, be wary of stocks right now. Those stocks have had a tremendous run. I think stocks could continue to rise, maybe another 3 to 5% over the next few weeks, until maybe a week or two before the elections. That's when things will become really volatile. I would urge you to get your defense ready, start to invest in gold, maybe even some physical gold, but definitely in gold and silver ETFs like the GLD or the GDX or the GDXJ or SIL. Maybe even put a little bit of money into cryptocurrencies. Bitcoin has already gone up quite a bit, but it's right now holding at about the 11,000, 11,500 range. Bitcoin potentially could be 20,000 a year from now if the market crashes and if we don't get a COVID vaccine on time. Also have some cash. You don't want too much cash, but maybe around 5% in cash, and keep that in a place that's safe and available to you easily. And then if you're thinking of starting to rotate out of some of your growth stocks into dividend stocks, that's a good idea. And again, make sure you only keep stocks that have a lot of cash on hand with no debt, and also stocks that are in a leading position in the work from home area. And this would be things like the Googles, the Facebooks of the world. Okay, thank you very much. I'll give you a second to once again look at the 6 things you need to be doing to keep your neighborhood safe from COVID. Thanks again.